Welcome everyone to the Kendall Report. It is Tuesday night. Sorry about last night. Sometimes issues come up and the world takes over your life sometimes. Anyway, so everything's good. Glad to be back. There will be just a quick announcement while I'm thinking about it. Thursday night, I will start probably about a half hour late. It could be a little bit longer. I've got another conflict I'm dealing with there. So the final video for the night, set your clocks a little bit further ahead. I think I should be able to be ready by maybe 9:30 on Thursday night. So mark your calendars on that as well. Anyway, the title of this video is The Focus on Employment Starts. And so we come out with ADP numbers tomorrow. We've got a bunch of we've got ISM, non-manufacturing coming out. And then we get into Thursday, we'll have claims and continuing claims. And then, of course, on Friday, we get the employment numbers. So we'll be focusing, market's going to start to focus right in that as we come into midweek. Interesting pattern, which I would discuss. I put out a tweet a little while ago. We did get an outside reversal to the downside today. So we'll talk about that. It's unfortunate. I was disappointed I couldn't do a live stream last night. I did put out the market grid on Twitter. So if you're not following me on Twitter, do that. It's Twitter. It's at PortfolioXpert. There's no E in the expert. It's portfolio and then just the X. And so follow me there. But I did put out some numbers last night. I put out the database is still having some positive upside. I still see people hanging around here talking about the rug pull and all that kind of stuff. Don't get too hung up on that idea. It's not going to serve you well. I do believe there might be, if you recall, when I covered the long term on Sunday night, what I did talk about is that we're going to probably rally into Q3, maybe mid Q3, whether it's month 1 or 2. We'll see how all the patterns set up. But there's definitely some things coming up where it looks like we're going to have some negative flow, and that will probably play into the intermediate database that's around 59% bullish now. And I can tell you, rug pulls don't happen when there's this many long positions. And what it means is there's trends involved, and trends don't break down, especially on the intermediate at those levels. I'll talk a little bit more about that when we get into the database here in a minute. A couple things. I didn't go through it really in detail, just looked at a couple things that came out today. Of course, the infamous Jamie Dimon came up with his letter to investors today, really trashing and ripping on the Fed. And as much as there's so much to talk about here. There's still some things going on with the banking system. They're still struggling a little bit. You know, it looks like at least the stories have moved to the back page. There's still a lot of folks out there still touting how the end of the world's coming. There's this one report that's pretty funny. These guys claim this is funny, folks. If I would want you to delete my channel if I ever said this. Is that I got an email from some marketer, I won't mention who the firm is, but they claim they're 99.8% right. So, I mean, if I ever said that, God, please never listen to me again, okay? That's a little high probability. But the reality is that what we're dealing with here is still some underlying things, money's being shifted around. We saw the KRE, which is a regional bank ETF, down 2.21, and the QABA, which is a community bank, was also down 2.36. They're still playing with these lows here, but it looks more like a consolidation. I went through some of I did a kind of a cursory view through some of the stocks. I built ETF hacks on both of those indices, so I have quite a few, about 300 stocks. I just kind of thumbed through them real quick, and it looks like it's a mixed bag. There's definitely some pressure coming in on some of these stocks. So there's still issues out there in the banking system and things that happen. I'm not in the camp that things are going to roll over and the end is here. I do believe there will be a lot of money shifting around from where they've been deposited. Maybe CDs aren't going to be in play, but people are moving money around into money market funds and things like that. There's still some things like that going on, and why not? You can get paid 5%. Why wouldn't you want that? So that's still going on. And I think one of the comments that I just from the Jamie Dimon comments and ripping on the Fed, yeah, the Fed kind of set everybody up for this disaster, especially with this hold to maturity whole concept here, and they had all these assets laying around, and the Fed did force them, kind of had a, I'll say they had, some kind of electronic prod just moving them into these bins, and some of these securities that could have been hedged to a little bit of a degree. I spent from around probably 1985, 86. I was really focused on the hedging of the bank gap, and primarily with banks and with the mortgage brokers and people I worked with. I had Weyerhaeuser used to be in the mortgage business. They were one of my primary accounts, and they were a big mortgage banker, and just hedging these gaps, and most of that was pipeline hedging that we did. Then I started even going back early in 1983, working in a group that we were talking to banks about how to hedge this gap risk. And I made this comment before, is I think a lot of folks seem to have forgotten that they could do these things, especially on at least a tradable strategy. And there's some other things they could have done to shore this up. So while Jamie's right about a lot of stuff, I still think a lot of this goes on to really poor bank management. And I think it came out of the Fed and just having zero rates for as long as they were. Everybody, very few people thought they would raise rates. And I'll just kind of continue on with this talk to the Fed, that there are some, I did notice there were some comments coming out this afternoon. I think was it Meister, the Fed chair, not Fed chair, but Fed president. I think he's non-voting, but he was rattling. He's sort of like some of the others that are the talking heads that are going to put out some kind of rhetoric around the banking system. They're messengers, and it's not really material, but there is I'm still the longer, higher for longer guy. I still believe that inflation will stay up. I still think interest rates are going to come out. I do not think there's a pivot like the market's trying to price in. I do not think that the back end of the yield curve is being priced like this because that they're defying the Fed. This is actually, I told you folks before, this is what the Fed wants to see here on the yield curve, and it's really a demand issue on the back end of the curve. Not so much people are trying to price anything in. There's just no demand on these longer term securities, and especially on mortgage backs. And I'm going to try to get out of this loop here in a minute, but you're just looking at real estate as far as their retail, and real estate is starting to bottom out, and so we're seeing some flattening there, and that's all you're seeing. And there's just no demand on these longer term securities right now, and they're purposely, as you would expect, keeping these front end of these securities up pretty good. We saw a pretty good drop in the 10-year on this page that's on where I'm at here on the bottom right. That is the 10-year. That's a 5-minute chart of the 10-year. So you can see it dropped. That was a basis on yield, so it dropped quite a bit, and so definitely came back in. All of a sudden, we're seeing that movement. I think it had a lot to do with Jamie's comments and all the stuff that happened. So I just wanted to kind of wash that out a little bit. Maybe tomorrow night I'll have some more comments on that. But I think that's really what we saw moving around today. And we did see equity markets print up into a new high in the sequence, and then get a reversal and got rejected up there. Almost perfect R2, if I recall. So we'll go through all those details in a minute. Just looking at some of my other numbers here. So yeah, I think let's talk a little bit before I go on. Is factory orders are coming out tomorrow. They're expected to be down 0.7, and I'm sorry, that was for today. So today being Tuesday, the factory orders came out minus 0.7, and JOLTS came out at 9.931 million of openings, and that's about 2 million jobs lower. And I think this is kind of an interesting thing, is this is what the Fed, I think, wants to see. I don't know what the magic number for them is, if it's 8 million jobs opening or what that trigger is going to be. But I think as long as inflation stays up, they'll at least keep rates steady. And maybe there's one more 25% move to the upside when we come into May, and then possibly maybe a pause, but it's going to be pausing at 5.5, which is, it's not going to be a reduction. I don't think it gets priced in. I don't think that happens. We'll see. I can change my mind. Okay, so let's take a look here. Just looking at my final notes here before I move on. Yeah, so we do have ADP coming out tomorrow, 215,000. ISM non-manufacturing is expected to be at 54.9. I don't think either of those numbers are going to have any big impact, but they're numbers to watch anyway. So let's go ahead and get into the database and get through the broadcast tonight. Thanks a lot. All right, so we did see 427 buy signals, 291 sells, so we're up to 39.78. You folks know that magic number. It is 42%, so we're working back towards that. And it's taken us about 4.5, 5 weeks to recover this database. So it's still finding a few more stocks to buy than to sell. Bit of a rotation happening here, and we may get a 2 or 3 day rotation from this standpoint. As far as the sectors go and the flow, we're really seeing things are starting to flatten out. Some of the sector indicators came in. Some of the sectors came in a few days ago, 4 or 5 days ago, and they're flat to down a little bit. So we're definitely right at that point where we're likely to see some rotation here, but it still looks like we should stay well above the 28%. I don't see us getting that kind of selling. I suspect more of a sideways, maybe back to 36, and see how it plays in there. Maybe we'll see a 42 print, and by the time we get into Friday and we get into these unemployment numbers. All right, so we'll take a look. We'll start with the hourly chart on the S&P, as we always do. And I think it's interesting. It looks like we have a little upside, but it should stall in the next hour or two. I believe we'll see potentially another day to the downside. I'm going to talk about that trade I mentioned. There seems to be multiple instances of this occurring. Is that 3-day trade or the reversal trade that actually popped up today? So we'll take a look at that here in just a minute. But the hourly chart, we do have some fib targets up here: 41, 38, 47. The 21-hour moving average is right in here at around 39 to 41. That should be the resistance. We're trading right now at 31, so there could be 8-10 handles on the upside. Not a lot of upside, but there's it looks like we should have a little bit there. Let's go ahead and look at the dailies, and the daily chart still has that. You can see the moving averages are being projected. They're still climbing higher. You see the STX number for tomorrow, I'll bring those up here in a minute, are right down at that 10-period moving average. And the PPM1 is at a plus 0.39, which that tells us there's only about a 30% probability to decline below that value of that 10-period moving average. And that number right now is 40.67. That's a bit below where we're trading. We're trading 41.30. So we're looking at a decent decline here. We'll go to the market grid here on the daily next. Let's go ahead and take a look at that. So market grid on this suggests we're looking at, let's review yesterday, because yesterday was interesting. We printed up to 71 and R2 was 76. So we got just short of R2, and then S2, I thought we could print down to S2, and we actually went down below S3. So what I put on Twitter last night is that I was looking for R1 S2, and we actually got R2 S2. So there's been a bit of a contraction of volatility, so we're more likely to expand some of these numbers for today. Let's take a look at these numbers. We're looking at right now the high low is 30, high is 35.50, low 41.30.50. So S1 is 41.16, which would be basically a retest of yesterday's low. 41.41 is right at that level I was just showing you on the hourly chart where we're likely to top out. So I'm kind of looking for R1, maybe S2 down to the 41 handle on the futures. That'll put us, the cash is about, what are we here on the cash right now? We're about 30, still about 30, 31 handles, a discount to the futures right now. But that should be the place where we start to head down to 41.16, 41.03 should be a reasonable target level here on this. We go back to the algos, they're also looking like they're starting to flatten out. You can see we should be able to climb above this, because even though they're flattening out, we're going to stay in trend mode up. And I want to flop back to TradeStation just for a second. We did have a buy signal come out at 4,008 on 327. So we're still working that buy signal, and we'll probably pull back into these moving averages, going back to TradingView here, and we should pull back in here. I don't think looks like it's set to climb basically the wall of worry. So we're looking at tomorrow, like I said, the 10-period moving average is 4,008 is, I'm sorry, that's the 21. The 10 is 40.67. And so that would be a pretty big hit. I don't think we get that low, but let's talk a little bit about this 3-day trade. Let's set that up real quick. So I'm going to expand this out so you can see the pattern a little bit here. See that the high on Monday was 40.57. Yesterday we printed up to 71. The low on Monday was 22, so we had a 71.15, and we closed in the lower end of the range. So here's the deal, is that we should probably not go much above that R1 number. That would be your point where you could actually go short, and you would look for two things have to happen tomorrow. We have to go below the 41.15 low of Tuesday, and we have to close lower on the session. So the close today was 29. We'd have to make a new low below 15. It could be by one tick. I'm happy with that. And we close lower below 41.29 tomorrow. That would confirm the outside reversal bar. And one of the things that's important, this is happening at the top end of a sequence. And I think let me just do a quick count here. Yeah, so we had 8-bar sequence. We had basically a 3-5 pattern that's set up. And so we should get 3 days down. I think it's limited. I mentioned this in a tweet that I did earlier, is that I think we're limited to the downside to this 10-period moving average. We may not get the follow through. Typically, if we get the confirmation, I've set this trade up for you folks before, but if you did put a trade on, you have to make a new low, you have to close lower, you hold it overnight, and then you use whatever Wednesday's high is where the stop goes. And if we don't close lower, then you're out of the trade by the end of the session tomorrow. And this is a really interesting setup. It's led to a lot of really good trades. And I think the last time we saw one of these, we got 2.5 days out of it. It was actually profitable, but it was not one of the big ones. And I don't think this, I'm going to qualify this again. I don't think this is a big one as well. What I think is you're going to be limited to that. The downside is going to be limited to this 10-period moving average, because we should be able to climb this angle of attack is enough. Like I said, there's only about a 30% probability getting through that. So you could even scalp off of that number if you wanted to. That would be a place to look to play. But tomorrow will be critical in this pattern. If we make a new low and close lower, look for at least potential for 2 more days. But I'm going to hedge that and just tell you this is probably not the big trade, but there's at least a trade potential down to that 10-period moving average, even though that 10-period moving average, if we went to outside, if we go to the next day, that would put us around 40.70 and then around 40.85, 40.70. So there's a decent trade here. I don't think it's the big top here, just based on the configuration that we're in. Okay, next we'll cover the NASDAQ. NASDAQ is similar formation. The only difference is it's starting to weaken finally, and I talked about this on Sunday night, is that we're seeing a little weakness. We still have some positive tone. The PPM1 is at 0.40. Anything over 0.25 is a trend, and we should be able to hold that line. The minimum value on PPM1 that will suggest that there's support at that line is 0.15. That is your minimum. So we're well above that. We're at 0.40. And it looks like, based on the algo, that we're going to stay probably around 0.2, 0.25 in that range here for the next couple of sessions. So that just tells you that same as in the S&P, that 10-period SMA is going to be the target on the downside. So if we look at those numbers right now, that's 13,000. We're just going to round it out. 13,000 is that number, 13,033, but we'll round out to 13,000. And if we look at the market grid, I know it's small on the side, but the market grid will give us the ability, let's see here, S2 is 13,125, S3 13,076, and then 13,032. So STX is right on that 10-period moving average. So we'll see how that acts tomorrow. We did not get, this is interesting because this happened the last time too, we did not get an outside reversal signal on the NASDAQ. So this has a different configuration completely. All right, so the Russell had a pretty good hit yesterday because Russell was down 1.82%. It just pulled all the way back into these averages. I was talking about this 200. We basically got to the 200. That high was, let's get these numbers out here. The high was right at 1823. I was talking about 1824. That's 1831 is where the 200 is 1828. So we basically tested that. We got rejected out of here. We still have an upward pattern on the PPM1. We're at 0.23, so it's at a value that we should be able to hold this 10. We're actually trading right on it right now. 1778 is that 10-period moving average. The last is 1782. So we're setting right on support. I suspect we just continue to get sandwiched between this 10 and the 40 period moving average above it. And we're going to see it's being projected in the next couple sessions for the 40 period to cross through the 200. So I think we just see after today, we get a chance at the market grid turning back up and just staying in that pattern. The low end would be the 21 period moving average, which right now is at the 1778. So 1776 at 1778 range is that support right now. And you're looking at a little bit lower over the next couple of days. But look at the PPMs here before we move on. Is PPM2 is being projected to accelerate. So what that's telling us is that this 21 period moving average is going to end up to be pretty solid support there. So if you're trading this around this 17, this number is right around 1778, 1775 range is going to be pretty solid support. And what we should do is just stay sandwiched in these moving averages for a few more days. And I think ultimately what we're about to see here in all of the indices is just really a consolidation, staying above these averages. They still have a positive angle of attack. So we should continue to move along that line. It's not really robust, but it's enough that we should see support in the market. All right, here's the 10-year. 10-year traded down all the way to STX yesterday. Those of you who have the indicators, you knew this. 3.35 was STX yesterday. The low was 3.35.5. Spot on the money. There is some new fib targets to the downside, which is interesting. They are, let me get this number up here. Yeah, they are 3.26, 3.12, and 3.04. That's these red dots here. That's pretty drastic. The algos are suggesting that we should start to consolidate here, that we're not going to get the follow through. It looks like this yesterday's range should have been the low spike on that yield, and that should have been enough to do it right there. And we should start to get a turnaround. We'll watch this real closely tomorrow, but we're pretty much at the peak. We're right at that range. Let's take a quick look at the 2-year on the yields. So 2-year traded down. This has at least got some updated numbers here. So we still have the downward pattern. You can see PPM2 has got PPM1 has much different configuration, but it's turning up, and PPM2 is about to turn up. So we should see a move back towards this 394, 398 level again, back into this range. And I would suspect we get the market grid to turn up and it stabilizes in here. And in the end, I'm not sure. I could argue and say this is a dead dragon formation, but it's a little unorthodox. And typically, you could retest the lows here down at 355. Now, does that mean there's maybe some more pressure coming in on the banks after seeing, as I was talking about, KRE and the QABA index? Maybe there's some more downside there. We'll have to wait and see, but it looks like probably that today's action to downside was the end of this move. We should at least start some consolidation. I don't see any big upside, but we basically pulled back. If you look at the pattern, we get basically a 5, maybe a 5.3. Whether we get another 5 up, we'll see. But it does look like the algos are favoring the turnaround in the market. At least it's suggesting we come back. Like I said, 394, 399 range should be the target. All right, so here's crude oil, still going up. Talk about getting the OPEC's, there won't be any knuckle bump next time that Biden goes to Saudi, if he does. I don't think he's welcome there anymore. And there's possibly something I might go into and talk about tonight. And I've been researching a little bit, so just bear with me for a minute. Let's finish the analysis here. But it does look like oil's trying to top out here. We did get RTX sell signal on Monday. Basically, well, we were up a little bit. We're in this sideways pattern. We usually get sandwiched in this market grid here. We should stay sideways. We should remain under the 200, and it looks like you can see the rounding of the moving averages starting to happen here. So we should at least move back down toward these moving averages around, we'll call it 78, 76 level. We should come back into that range over the next couple of days. So it should be a bit of a pullback, and we'll see how all this stuff sets up. But that looks like the best scenario I can put together. The 200 should be major resistance, and that's at 84.32 right now. So what was the high? We printed up to 81.80, it looks like. Yeah, 81.80 was the high so far. So it looks like like I said, we should peak out and come back into these moving averages, and then we'll find out. It looks to me, if the algos end up to be right, looking out 5 or 6 days, that we're going to at least come down and test this average. And just remember, the average is going up every day, roughly at. Let me get a value for you here. I'm just trying to get the right value. Yeah, so it looks like about 65, 70 cents per day. So that's going to be the value to watch. Like I said, 70, 77, 76. Yeah, and I see somebody just made a comment about the Saudis on the yuan, and that's probably. I want to mention something. I'm working on understanding this situation, and I will just say this: is it appears that between China, Russia, Brazil, the BRICS, right, and India, you're talking about 3 billion plus people, 3.1 something, almost 3.2 billion people versus the West. And if they do get a true alliance about with the yuan, and listen, China's all about China, right? They're trying to help out China. And I won't go too deep in this, but I'm working on a couple scenarios that could play out. But this is just a classic blunder of the Biden administration, right? This is where they have just screwed this thing up so bad. They have now managed to push Russia, China, all these countries. The BRICS is becoming real. And will there be a two-currency market? It's very possible. And I'm trying to look to the charts, look at some of the longer-term trends, trying to determine whether there's a big hit on the Dow or what these things are really meaning. So I'm kicking around, trying to put together maybe some kind of index. I don't know. I'm doing some research on the whole BRICS as a currency, how the yuan might rate as we come there if they really get this thing going. And it is getting going. There's a lot of transactions happening. And let's face it, I'll say the quiet part out loud just for a second, is that really what's happened is the U.S. imperialism using the petrodollar to control others is potentially coming to the end. Is what power does the U.S. have if they can't tell you, like what they tried to do to Russia and actually failed drastically, in my opinion, to really affect Russia in any way. I saw the other day unemployment report out of Russia at 3.5%. They've not been affected. So it's there's a lot. I'm already getting further down this trail than I wanted to get to. But the point is that there is something going on here. It is something to really look into because it could end up to be material. At the moment, I think it's mostly talk. I don't see this as an immediate threat, but like I said, I always do the same type of analysis, folks. I'm a quant, I'm a technical guy. I'm going to look at all of the technicals. I'll maybe start including the Dow if we start to get to a point where it looks like something's happening there. I talked about the other night when I did cover the Dow that we'll probably head back to right around par 100 to 98 on the Dow index. Certainly is a possibility, but that's not a disaster. That's a pullback. But I'm going to be looking at this thing a little bit harder and see if there's any patterns that are starting to emerge. And so I will cover that as we go through. But I think it's something real. And if you think about what I just said, that if you stack up the populations of just 3 of the BRICS, I mean, Brazil's the largest outside in this side of the world, the second largest population outside the U.S. I think there's 235 million, something like that. And the rest, you're looking at China and India at 1.4 billion. I mean, a lot of folks there that can have a big impact on the world. So it's going to get very, very interesting. Like I said, I'll look for material effect, and hopefully the technicals will lead us to a story that confirms or maybe negates that type of thought. But anyway, it's something that I'm looking at, just so you know, in this interesting point in time to, population does matter. It matters a lot, actually. But we'll go into this more as I develop some of these things. I always do this thing, and I talk to you folks about this all the time. I call it reverse fundamentals. If a chart's telling me that something's going to go up big or down big, I try to come up with a scenario and see if there's anything out there that would validate that scenario through looking at what's going on in the world or events that could happen that would facilitate those prices happening. So more on this as we go come down the road. I just wanted to mention it. Somebody I just happened to look at the comments and see that, but it's definitely something that really needs to be looked at. And the world is changing substantially. And whether it was COVID, whether it was just turning the key off and then turning it back on, but a lot of folks are coming into a realization of a lot of things. I've seen some really interesting little clips and videos of people around the world. We'll call them world leaders, but leaders of different countries making comments that are really starting to become, I would say, alarming on this situation. Having said that, what a great segue into gold, right? So gold, I've been projecting after this being a sideways range. Well, it's turned around already. It's climbing this 10-period moving average angle of attack, and it just continues to move higher. I mean, we're printing here at 2038 open. Last trade here, 2037. So we continue to go. The only thing we got yesterday, we did get an RTX sell, and I want to preface this because it's important, is that the RTX sells are not as powerful as the STX buy signals. And that's one of the releases I'm working on right now for new indicators is the STX buy signal. So there's some interesting things that I'll be covering on this. But the point is here is that whole scenario I'm talking about, if it's being played out anywhere, if it's visible, it's right here. So let's dig in and go a little bit further with the gold market tonight. take a look at the weekly patterns. I haven't talked about this for a bit, but the upward targets here, there are 3 fib targets, 2167, 2300, and 2388 on gold. And these are valid targets. And if you look at, this is weekly, you see an upward bias here that the moving averages are going to continue to move higher. The issue is, just like anything, once the market gets too far exceeded, maybe a standard deviation and a half above the moving average, it'll start to come in. It gets out of balance. It wants to come back to that average. But even then, the average is still up, right? So that's what you really have to look at from that standpoint. So I'm going to go a little bit further here, and this is the monthly chart, and you see monthly still has, some major upside here, and there's 3 fib targets even on the monthly. And let me bring those up so we can see those. Now here we go. High target 1, 2019, so we've met that. 2172, 2167. So there's a whole lot of, there's a cluster of numbers around that in the 2100 level. So I'll start to focus in on this. But like I said, if this is playing out anywhere, it's this number. You may recall I mentioned these numbers. You see these green dots up here where my cursor is right now. Let me just go a little deeper here on gold tonight. So let's take these numbers over here. This is where I'm talking about. Now that I've drawn this in, I'm going to have to go off, but I want you to focus in on these numbers. And really where this came from is a pattern here, and it was projecting out. We never really, you could argue that this low here negated that. And actually the pattern itself, our algorithm that does this fib targets, actually suggested that is no longer valid. I see these patterns still as coming out to play because I'm going to pull some things off, then I'll show you the numbers here in just a minute. But it's possible that the bigger pattern is something like this. And as I've been saying for multiple months, I'm very bullish gold. And I think as a core holding, it's something that should be around for sure. But the monthly algos are suggesting much more to come from that standpoint. So I'm going to try something. I don't think I've ever tried this, but let's see if it works. It does actually. So this would be interesting analysis. So I'm bringing up here a quarterly chart. And the quarterly is a little more neutral, but we have this upside here on the quarterly. Man, you could argue this is potentially a fourth wave, and we got at least one more move, maybe up into this range. I'm talking 2160 plus. I think there's much more in this thing. I really do. I think there's an argument for much higher prices. I'm super bullish on gold long term, and it just maybe in the end, what we're seeing here is, and maybe this is a story being told I just talked about, is that if this is probably a place to be played out. And I know the Bitcoin people, we're going to go through Bitcoin next. Bitcoin people are going to argue that, that's the play as well. And it could be. Bitcoin's, and I made this comment, I don't know how many times on this channel, is that Bitcoin and gold are very similar patterns. So like I said, this is a quarterly chart. So this super long term, this goes back to 2020. I wonder if we can go back, how far back? Oh, wow, check this out. Let's just consolidate. So this goes all the way back to 1970. This goes back to when gold went up. We went off the gold standard thanks to Richard Nixon. And so, but this was the 80s. I remember this well. I was trading a lot of gold. So we got to 873, and then we went sideways for years and traded in the 250, 350 range, and then here we are. So this is what I was looking for. I'm glad I expanded this out. But here's some numbers up here that are very interesting. Even though it's showing where this pattern has the probabilities to go: 24.22, 28.96, 31.90. I see somebody throwing a 5,000 number in there. Who knows? I'm just saying that there's fib targets that are going to come out. If you look at these patterns where I've got my cursor right now, just right above where I am, if you look at that, it was suggesting back in this day that we would get to the high end was 1566. And it took a while, even though we came right into that range. And of course, we had Fibonacci targets over here at 1757, 1941. So we went right to pretty much into that range. We got into 1790, and we backed off. So these patterns, even though they get negated, if you have the patience, we're looking at patterns that were initiated back in the 1980s, didn't get played out till 2012. So when you start looking at a chart this long, it's most likely we're thinking about prices that are going to be much higher, but it's way down the road. And maybe this new world that is starting to form, which could be, let's say, two currency transaction system. There's still a lot of advantages. I'm still stuck on this BRICS currency, using the yuan to settle with. There's still an advantage with the SWIFT system and the settlement system. You need to have that in place, but there's a lot of smart people in those 3.2 billion. You can definitely recreate that whole environment and come up with a transaction settlement system for sure. So, yeah, the world is going to evolve and change, and maybe that's what we're seeing here. So maybe I answered my own question right here on this video tonight. So at least some intriguing thoughts that I will follow up on as we go through down the road here. So a little bit of a rant there. Let's go on and do Bitcoin. All right, well, I'm just leaving this 3-month chart up here. You can see Bitcoin, it's got this big volatility. Nothing really to see here. Let's back up. Let's go to monthly. I'm really glad that we're doing this, okay? So monthly, we're looking at valid Fibonacci targets off here right now. And we're looking at, let me give you these numbers. I'm just going for it tonight. 58,879, 71,311, and 80,846. So 55, we'll call it 55,9, 71,3, and 80,046. I see a whole lot of people like, you have to understand that, just real quick here. You have to understand that there's a lot of talk out there with governments, everything, with CBDC, with Bitcoin, that there's going to be regulation to stop this. I'm not sure there's a way to do that, actually. I'm not a crypto or Bitcoin guy per se, but these are interesting numbers. We had similar projections before for Bitcoin. So looking at monthly, when you look at the quarterly, the entire history of Bitcoin, it's really just mostly volatility noise here. And this chart here is interesting because I could go into a deep analysis of this, but it does there are some pretty interesting targets around here, and I would call right now. Let me just bring this up. The trigger, the pivot point, 32,970. Mark that number down. That's if we were to get above that, then we would see an acceleration to the upside. I'm unable to get the algos to run because there's not enough bars here. I can make some adjustments. Maybe we'll do that another night. But I kind of fell into this thing by going top down. So let's go to weekly now and get kind of back to where we normally are. So the weekly, you can see here, is still got that upward slope here. The algos are suggesting we're going to stay. These are really big numbers here, folks. These are numbers that are at, as far as the angle of attack here, we're looking at 1.99, not 0.25, but 1.99. So these are huge numbers. The probabilities of getting under these moving average values right now, which are at 25,000 right now, is less than 10%. So we definitely have a big weekly trend going on here. And it looks like we're going to move up at least the bottom end of this trend, which is where the moving average is, moves up to around 28.5 plus. So it would be easy to expect that we could see that 32 number I just mentioned challenged. And I don't think, there's no current Fibonacci's targets coming in here on the weekly chart. So we'll finish here on the daily just to basically get this down. There is, like I said, it's similar to gold. It's gotten in this configuration. If you think about when we were looking at gold just a minute ago on the daily, we basically went in the same little pattern, and we do have Fibonacci targets here on the upside. We're looking at high target 1 at 2933, 30,200, and 30,900. Okay, so everything is still kind of flat here. This is daily, so we're looking at, but these are positive trend numbers, where ppm1 is at 0.38, ppm2 0.74 positive, and ppm3 0.54. So all of this angle, even though they look fairly flat, are still very positive. You can see yesterday we had a ppm1 at 0.23, and it looks like it should accelerate in the next day or so. But if you look at the low here, let me just get some numbers here. The 21 period moving average, 27,548. Let me get over to the low yesterday. The low yesterday, 27,686. So we did bounce out of that number, and we're seeing a little upside here tonight. 1.3%, up 360. Hang on. Up 484, 1.72% tonight. So it's moving toward these fib targets. The upward trend is well in place. So there's plenty of upside. So that was kind of an interesting little rabbit trail we ended up down, starting with the gold. But there's definitely those two markets, gold and Bitcoin, do have very similar configurations and are telling the same story, which is a big story of maybe this currency thing becomes real. And in the end, I have a lot to consider just to see if there's anything going on. And just in closing here, let's go ahead and come off screen here. Yeah, just in closing, is one of the considerations, the beauty of how I approach the markets is I have this software, right? So I'm looking at the percent bullish. We're up at 59% intermediate. I'm telling you, those of you who've been around the last few years, you've seen the ebbs and flow. And I was called absolutely crazy in October, November of 2020 that there was going to be a big rally coming forward looking into 21. Well, that worked out pretty good. 22, we spent most of the year in heavy cash. We were out of the markets for the most part after January of 22. Now, as we come into the fourth quarter, October, we saw a positive rotation off the lows, October lows of last year. And now we're seeing still a continuation of those patterns. And, and you folks don't have, and you shouldn't have, the confidence that I do in these trades. But I've been watching these things for 25, the better part, almost 3 decades. I live and breathe this stuff. We've managed well over $275 billion in this process that we have. I don't even ever show you the portfolio process. That's going to change when we come into May. But I want you to understand that these numbers, I have a lot of experience, and I have lots of folks who've been around that have been in and around me for a long time. I have customers that started in the early 2000s still with us. And my point is that the way that this data rolls is very significant. And here's the deal. If this thing decided to roll over 3 weeks from now, we're going to get sell signals. We're going to get out of the market. Doesn't mean we won't lose any money. No, it doesn't mean that at all. What it does mean is if there is a major rollover in the market, I'm not going to be Harry Dent or one of these guys stuck on my scenario. I'm going to go, I'm bullish. No, I'm going to be bearish, and all that stuff's going to happen. So those of you who've been watching me for a couple of years, you've seen me go through these different cycles. And right now we're still in a positive cycle. The dailies are coming back on the database. The weekly intermediates are coming back. And I'm gonna follow that trail because it's led me down a lot of good trails. And sometimes it seems very counterintuitive. And I still am buying into my own narrative is that we will see continuation into Q3 on the upside. Something could happen tomorrow. They tried to derail it with the banking crisis. Like I said, there's still some noise. There's a fair amount of noise around the banks yet. Even though the worst looked like it's over, there's still some noise out there. So you have to pay attention. But regardless of that, if we start to see some kind of rollover or something like that, I know people like to call for the rug pull. There's way too many trends in place right now, almost 10,000 of them on the intermediate. And it's just unlikely that it comes from this position. Doesn't mean that it can't. I'm just telling you, the probabilities are saying it's unlikely. So anyway, folks, thanks again for hanging out. I apologize for last night. And remember, on Thursday night, probably going to start about a half hour, maybe a half hour plus late. It just depends. I have somewhere I have to be, and I already know it's not going to be on time. Unfortunately, this time change is terrible because I didn't move, but I find myself living on the West Coast right now, so I'm 3 hours behind the East Coast. So it really changes the time zones and when I have to be here. So unfortunately, like I said, Thursday night will probably be at least a 9:30 plus start time. So just mark your calendars. Anyway, thanks for your patience last night, and thank you for watching tonight. Hit the like button, and we'll go forward. See you tomorrow night, same station, same time.